Good morning, traders. This is Tony D from the easyMarkets dealing room. Special update today because we have the Trump-Kim meeting currently in progress. So far, so good. The 45-minute full team meetings that was just with Trump and Kim seem to have gone well. Body language was great on the entry and the exit. And this is providing a little bit of stability in the market because dollar yen, which is the natural way of playing this event, is above 110 as we enter it, holding above 110. A little bit of profit taking so far. No news though, and this, if they do see any sort of issues here, dollar yen would be the first to crash. So you can probably set up a 110, 110.60 sort of breakout zone here in regards to the trading of this event. One way or the other, the market's probably going to be moving there today. Positive news will really help risk appetite and dollar yen in particular. Negative news is much bigger to the downside, but so far it looks good, and there's been a lot of preparation for this, so it should be good. It would take a bit of a shock for things to unravel at this point. Probably getting announcements of the end of the Korean War or something like that coming from this, and not so much denuclearization in one meeting. But it is a huge week from the market, starting with this event, but leading to some really big central bank meetings led by the ECB and the FOMC. Now the FOMC is very likely to raise rates. That's all priced in, but what's important is whether they talk about raising rates in 2020 or what they're going to do if the market continues to be so strong. Remember, GDP is forecast at running close to 5% in the US at the moment, and unemployment's dropping to multi-decade lows. So there is all the ingredients for rate hikes past the natural level, which is currently where the market's forecasting them to stop raising rates. 3 rates this year, 3 rates next year, and then pause. But if the market starts to price in more rate hikes in 2020, then you have a scenario where the US dollar has room to move higher against most pairs. Especially if its big rival, the euro, gets any dovish rhetoric from the ECB. Now, it is expected that the Fed's going to be playing upon the patience words and the cautious words, and you aren't going to get that view coming through too early. They definitely don't want to rock the boat just now. But if you're talking about the Fed, the ECB's situation, well, the ECB's situation is that the CPI is creeping higher, the Italian issues are disappearing, and they're getting closer to the September end of QE. Natural end of QE date. Now they could extend it to December, try and smooth it out a little bit. They may play a little bit coy on announcing the date, but it's getting closer and closer, and they've already announced that this is going to be a debate, a topic talked about at the ECB when they're ending QE. And this is important for the markets because once you end the QE program, the next big debate, which the markets naturally will jump onto, is whether they're going to raise rates and how quickly they're going to raise rates. Now, what you're probably going to see from the ECB President Draghi is similar to last month, where he will, even if he does announce that the end of QE is coming, under consideration, he will say that rate hikes are going to be far off. And he'll be very strong on that. But the market doesn't have to react negatively to these sort of rhetoric. It's very natural for Draghi to be saying those things, and if it wants to go higher, latching onto the end of QE could be enough. Draghi being dovish is very normal and not unexpected, but if there is concrete moves from the ECB towards ending QE, that could be enough to spark this rally in the euro, getting us back closer to 120 than 117. But it is an important week. You can see the market is in a broad downtrend. How we come out of this downtrend after this correction is important. It could be range trading, could be resumption of the bigger euro uptrend, or it could be resumption of the downtrend. Now that is also a possibility, probably less likely though now that Italy's off the scene. There is only so much time that the US dollar can rally, and so much space here for it to rally before it starts to not make too much sense from the fundamentals point of view. Alright, now the impact on the euro rally or weakness this week will directly impact the Aussie and the pound, which are both attempting to form bases and rally. Both of them have had a little bit of issues in the last 2 days. Friday and Monday were not easy rallies for the pound. Both rallies were sold off, and the Aussie dollar is having a little bit of time underneath 76 on both those days. But both times so far the Aussie has come back up. So Aussie dollar's developing a little bit of strength here. and is you know, starting to perform a little bit better, looking a little bit better technically. You can see these 4-hour candles. You can see the market finding support, and while we continue to hold above 76, I think we're constructive and very likely to settle into a range here. And range trading in this market makes a lot more sense than US dollar strength or US dollar weakness. We just haven't really worked out where the top side of the Euro, Aussie and Pound range is for the short term. That is the bigger debate perhaps that we're going to have, but it could be much higher than we currently are. This looks much more like the bottom end of the range than the top end for the Aussie, Pound and Euro going forward. If you want to have a discussion on some of the crosses or some of the big events coming up and how to plan your trades around them, come through on the dealing room numbers below. If you're not a member of the easyMarkets dealing room, you can get a dealer like myself assigned to you, but you sign up below. Someone will contact you to assist you with the account opening process and then the dealing room account requirements. Thank you.